Hey there, Trader Tim from E-mini Mind doing a Monday market analysis video. Going to be a big week here. We've got the election coming up tomorrow. The Fed is also meeting. So we are going to be doing a live trading session on Thursday, and you can check that out at eminimind.com/VIP. So we'll kind of walk through the charts in real time and see what happens this week or coming into this week. Um, you know, expecting the volatility to either stay the same or increase was kind of my thoughts coming into the week. I bit the bullet and put on a hedge, short hedge in the SPY, simply buying puts to cover some of my long positions in case we do end up kind of diving off a cliff here and breaking below the 61.8. I really wanted the market to get more of a bounce and volatility to come down before putting that on, but because I didn't put it on up here, um, I was kind of sitting with an unprotected position. So if things go up from here, great. I can ditch the hedge and we can keep on rolling like we've been. But if things do roll over, or if we do go considerably lower from here, then I'll also be protected. If we look at the VIX that I mentioned, we're kind of in that mid 30 range, and this would be kind of a key area, the June highs where we touched, about 44. If we go back to the SPY, we can see those June lows, I guess would be here, and that's down. Actually, we'll go to the SPX here. That's down at about right around that 3,000 level. And so if we were to you know get a sell-off, that's where I would be targeting, kind of the full retracement, if you will. We've got the low to high, and the low point is right about that 3,000 level. And if we do get some momentum to the upside, if things start to look more positive here in the next couple of weeks, then taking out this swing high all the way up here from the middle of October is really what we would need to sort of validate that we're going to be we're going to have enough momentum to make it to the negative 23% target. So if we just bounce to like 34.50, well, then all we have is a lower high. And so we have the high, all-time high, and then the lower high here on the 12th. And if we can't break that, then all we have is a lower high. So it'd be worth shorting into if it rolls over, shorting below the low of that candle's um, bar. And so if that's the case, then we would be looking at another kind of retest of the 50%. The let's see, no, it was BLFS was the long trade that I had. I closed it out here on Friday as we broke below the prior candle, making a pretty big push up, and then seeing that kind of come back. Just not really getting a lot of follow through, and with the earnings coming up, like we talked about last week with some of the shorts that were just kind of lingering and not really falling off a cliff yet. It's okay to get a little aggressive with your stop and just get out and then look for a better option or a better opportunity cost with your position. So no swing trades on. I've got the SPY hedge. For those that follow along weekly in the trading room, we talk about some of the longer term stuff. Most of you know that I kind of build a position. I try to keep things simple with my long-term position. So what I like to use is the Vanguard VUG for one of my long-term, just kind of buy and hold growth stocks or growth ETFs rather than the mutual fund. And so if you're kind of looking for a place to park money long term, rather than breaking it up into, a half dozen or a dozen different funds, you know, plug it away into one fund at least till you get to, like 200,000, and then you can maybe start looking at going, you know, two funds at 100. As far as a bond fund, I do like the VWESX. It's a Vanguard ETF, to kind of smooth out some of the ups and downs. And so if you did have let's say you're working with $100,000, if you wanted to put 80 in the VUG and then 20 in the VWESX, that could be a nice breakup. But I don't really get too complicated with my long-term strategies. Just as I with the day trading and swing trading stuff intraday, trying to keep things as simple as possible is really what's going to get you uh, the furthest over time. And when it comes to long-term investing, time is your friend. Just like with intraday trading, getting in the trade is the easy part. Hanging on to those winners as long as you can is, for most folks, the challenging part, but that's where you make the money. So I just wanted to touch on that a little bit because I know there's a lot of people kind of thinking, what are the next 4 years going to look like? And, even with a lot of outside influence as far as news is concerned, if you're just looking at the price action, the candles, and the chart itself, all of that information is visible in the chart. And the technicals kind of speak to what's going on in the economy or in the sort of the real world. So I don't get too caught up in a lot of the news and the politics and the economic stuff. Because it is depicted in the price action. And so if you're just kind of plugging away each day and each week, whether you're trading the ES or the currencies or gold or crude, you don't have to get too granular with some of that external stuff. If you just focus on the same setups, the same patterns, the same market, kind of the same time frame, because you can spot changes, things like volatility changing, the ranges intraday getting bigger or smaller, the speed at which you get filled, and then the market runs to your target. All that stuff, if you're really honing in and focusing on maybe one or two markets and one or two time frames, you'll really be able to grow as a trader a lot faster. So it kind of all ties together. Keep things simple in your long-term accounts, your day trading accounts. The simpler you can make it, the better you're going to have, the better results you're going to have over the long run. So if you have questions, feel free to leave them in the comments below. And if you like these videos, please give them a thumbs up. Thanks and have a great week.